What's up, everyone? This is Silver Slayer, and welcome to your daily silver stacking video. Thank you for tuning in and supporting the world of silver. Liking the videos, commenting, subscribing, it all really does make a difference. Please do your part. I'm doing my part making the videos. You liking the videos, commenting, sharing, subscribing really does help. So please, let's get the word out of not only the dollar's worthless aspect, but silver's true value. And you liking the videos and commenting is the best way to do that. You definitely want to subscribe though too. I'm giving away some silver to one of you next week. Yes, you heard me right. You might have a chance to win some silver. Not only that, the Silver Stacking Podcast is also doing a silver giveaway when we reach 1,000 subs, which we're at almost 800, so only a few spots left. We post weekly podcasts every Friday on that channel. We just got done recording the 4th episode. So fun. We got special guests, huge special guests coming. I'm talking about people that have hundreds of thousands of followers on Twitter, major people, staples in the precious metals world, and it's just going to be a great time. A lot of stuff on there to learn. Me and my co-host, we have so much fun. We come from different specialties and backgrounds in the precious metals world, so it's just a great. It's so educational because they're an hour long, and like every 5 minutes we're talking about something different, so we cover a lot of ground. I know you're gonna like that channel as well. Make sure you subscribe though and click the bell. You do not want to miss my giveaway, trust me. Now we see a headline right here: gold may rise but silver may double in 2022. Silver may double in 2022. Remember that. Now, I already covered this article, but I want to just really show this headline in all of its glory because this is critical. Now, let's go over here. Let's throw some context in that. The national debt's $30 trillion, right? I remember when it used to be 26 trillion, 27. It recently was 29, and now we hit above $30 trillion, and it's never going to stop. We're trying to pay off debt by replacing it with more debt. It's like trying to pay off a credit card with another credit card. The dollar has literally lost 98% of its purchasing power. Not 97%, not 99, 98% is a literal and factual number. 44% in the last 20 years. It's getting worse very fast. So what are you going to do? You put your money in something that has value, intrinsical value, precious metals. A 1 ounce silver coin is always going to have 1 ounce of silver in it. And guess what? The value isn't the price tag, but the 1 ounce inside of it. No matter who says that 1 ounce coin is worth what is irrelevant, because the value is the 1 ounce inside of it, not who says that coin is worth what, the price tag. So you got to put your money in something like that, or your money's literally burning away in your bank account. $30 trillion in debt. We're throwing trillions and trillions and trillions out, not only just from, the global situation, but then we also had a lot of stimulus getting thrown out, back in 2008 to 2011, it was billions. Now it's trillions. And this is definitely going to cause an effect on precious metals, right? Quantitative easing, we have to print more of these dollars, meaning it's weakening the dollar. And we know there's a direct correlation or a negative direct correlation from silver prices to the dollar index. So when gold and silver is up, the dollar index is down, and vice versa. And since we know the dollar index is steadily going down, especially for the point of the video that we're jumping into, that means gold and silver prices, especially silver, is going to spike. And I say especially silver because of the silver shortage, right? Gold isn't going to have a play in the silver shortage, but silver will take on a life of its own beyond gold and the dollar index very soon, as there's not much silver left, but there's a lot of demand. Actually, so much demand, we exceeded 1.12 billion ounces of silver. That is insane. That's multi-year high. U.S. Mint sold 5 million Eagles in the first month of January. Annually, it's around 13 million. Perth Mint, Royal Mint, all also acknowledging the shortage and admitting that they also have multi-year highs. I mean, silver is being bought up not only from the industrial sector for EVs and all that, but also people like you and I. Everyone wants a slice of the silver pie, but there's not enough of it. So 7 rate hikes. So we just talked about all that industrial. Now we also have the dollar side of things. 7 rate hikes they're going for. First one in March. March silver prices could do a lot of things. There's going to be a lot of speculation right now because people are trying to figure out which way it's going to go. Are they actually going to pull through a 7? Well, they are very keen on every single meeting the FOMC does. They're going to try to do a rate hike. That is very scary. 7 is insane. 4 even seemed like a lot, but they're going for 7. Now, let's look at this. Fast rising wages could cause the Fed to raise interest rates even higher this year. Rapidly rising wages are expected to push the Federal Reserve interest rate hike even faster of a pace, and averaging hourly earnings are running at 5.7% pace over the last 12 months, near the highest level in 15 years. Bank of America is sticking to its call for 7 rate hikes this year as the Fed looks to control the higher cost of living. And they are serious about this. In March, the first one, I can't imagine what silver prices are going to do. It's definitely going to be up in the air right now because they use words like expect, right? They'll use we should. They'll use all these words that, it's not set in stone, but people will invest as it is set in stone. So right now, from speculation, the markets are almost in this false state, the false price. And then once we see how many rate hikes they actually do, the markets will then correct back to normal standards. But right now, there's going to be a lot of speculation in the air. So average hourly earnings jumped to 0.7% in January and now running at a 5.7% pace over the last 12 months, according to the Labor Department data released Friday. Excepting a 2-month period during the early days of the pandemic, that is a wide margin, the fastest ever move in data going back to March 2007. 2007. Now, while, and that's important to note of because remember what happened in 2008, credit financial crisis, recession/depression, billion-dollar stimulus led to $50 silver 3 years later in 2011. And that's from 2008 to 2011. So we see that it's the fastest ever since 2007. So that led right into the credit financial crisis. Now, while that has come as welcome news to workers, it's posed a further, quandary for the Fed, in which it increasingly is being seen as falling behind in terms of policy and having to catch up to inflation that is running at its fastest pace in nearly 40 years. If I'm the Fed, and that's another important thing, 40 years, well, that's also the last time silver was at its highest price, right? 1980, $50 silver, 2011, $50 silver. So we see a pattern here, right? 2007, that is what led 2008. That 3-year period led silver to $50. Now we could talk about the fastest pace in 40 years, which was also 1980, the highest price silver's ever been. Do you see how we are going in terms of everything that led to extremely high silver prices, and now we're in it again? But now we have a global situation. I can't say the word, but you know what I'm talking about. And we have a massive silver shortage. If I'm the Fed, I'm getting more nervous that it's not just a few outliers that are driving wage increases. And that's from Ethan Harris, Bank of America's head global economics research, said in a media call Friday. If I were the Fed chair, I would have raised rates early in the fall. When we get this broad-based increase and it starts making its way to wages, you're behind the curve and you need to start moving. BofA and Harris have issued the most aggressive Fed call on Wall Street for this year. The bank's economists see 7/4 percentage point rate hikes in 2022, followed by 4 more than next year. So we're talking about 11 rate hikes within a year and a half period probably. And the first one is only, they said it shouldn't exceed 25 basis points. So it's not much, but the numbers don't lie. And if they really are trying to push it to this extent, this is going to cause massive, not only speculation, but just controversy. And that's what fuels precious metals since it's a safe haven asset. The economy's not just hitting the Fed's goals, it's blowing through the stop signs. Harris said he's not backing off the call, right? They're really pushing this. They're really pushing this. And even though markets are currently only giving the scenario of an 18% chance of happening, and that's CME data, and that's exactly what I'm talking about. People are going off this information saying and thinking and investing as it's 100% going to happen. All seven, 100%. But you have to remember, using words like we expect to hit seven, or we should, or we hope, or the goal is, that doesn't mean that it actually will happen, but people are investing as it is. So you can see how the markets are in this false state. And that's also why I hate that speculation word that occurs in the precious metals world so much, because you're basing something off of supply and demand, not just stocks or crypto. Gold and silver is tangible. It should be based more off supply and demand, the fundamentals, more than speculation. But that is in today's day and age, and we have to adjust and adapt accordingly, right? So he cites the Fed's new approach of monetary policy, or to monetary policy, that it approved in September 2020 under when it deemed flexible average inflation targeting. The Fed said it would be willing to allow inflation to run hotter than its 2% target and interest rates of achieving full employment. But with inflation running around 7% year on year, and the labor market getting even higher, the Fed now is in the position of playing catch up. The problem with the whole approach and what's got us calling for 7 hikes is the economy's not just hitting the Fed's goals, it's blowing through the stop signs. And then Harris points out the wages are surging across virtually all income classes. And you could see this is from 2008, and then you see this, which is insane. But remember, this led to $50 silver. Now look at this. Things are not normal. They're far from normal. And the worst part is that we know there's other factors behind the scenes that are affecting silver prices, right? I was talking about this on the podcast today with TJ. Let's say 5 years ago you put on a blindfold, and you looked at today's time but didn't know the price of silver. You would think it's triple digits, but that's not the case. All we can do is adjust and adapt, tweak the odds in our favor. Gamblers throw money, hope it sticks with the odds highly against them. Investors make strategic decisions based off information and use that information to make the odds in our favor, right? We can kick, scream, cry, complain, whine all we want, but that's not going to do anything. We know it affects the markets. We know where the dollar's headed. We know where silver's headed. We know the demand and how much more it's going to be needed in the diminishing supply. So we are taking this information and using it. You're almost looking past the value right now, right? We're not looking at silver's value right now. We're looking at where it's going to be, kind of like real estate, right? If you're gonna purchase a house to flip or something, you're not looking at the house right now. You're not looking at the rental properties around it right now, or the neighborhood. You're looking at where it's going. Are they building schools, shopping centers, or are they tearing them down? So then when 5, 10, 15 years hits, you'll be able to see if the property value is going to rise or fall. That's what investors do. Gamblers, they just go off on a limb, right? So knowing that, we obviously, especially looking at all this data, um, can guarantee that silver is going to rise. It's not like the dollar is going to last forever, or the purchasing power, which has a direct correlation to silver prices. So, anyways, I just want to throw that out. I mean, it just keeps going on to the rate hikes. If you want to read the links in the description, I really just wanted to get the point across, though, that silver is a ticking time bomb, but it's not a get rich quick scheme. You're gonna have to be patient, and that's actually a beautiful thing that silver stacking has taught me, is patience. At first, I was not, right? When I started 7 years ago or whatever, I was always hoping it was going to explode tomorrow, but it's actually a silly idea, because then I didn't have enough silver where I would have even really profited. So use this to your advantage, lower your dollar per ounce average, build a nice stack, a nice foundation, and then it will be a lot more rewarding and profitable. But always remember to take the emotional attachment out. That's the most dangerous part. Impulse buying, panic selling, that always takes people out quicker than anything else. So I'm gonna wrap this video up here. I really am interested what you think about all this. When do you think silver's really gonna take off? Do you think it's going to be next year, 5 years, 10 years, and to what degree, right? Like me, for instance, I think silver's really going to take off or explode around 2024, 2025, probably around 2025. That's when the Green New Deal and electric vehicles will be in full effect. The silver shortage will really be exposed by then because we'll be out of silver basically by then. And I think that's when everything, especially even the dollar and all, is going to be coming together where silver undeniably will have to show its true value, right? You can't manipulate or try to hold back the price to any degree at that point, like it still can today. So yeah, I really hope you enjoyed this video. Please like the video. Please comment, even if you just say, hey, what's up? Liking and commenting helps the video so much. It would mean a lot. Also, make sure you're subscribed because I'm doing a giveaway next weekend. You don't want to miss it. So subscribe. Go check out the Silver Stacking podcast if you want a lot of other content to talk about or to watch. You got hours of footage over there. We've posted 3 podcasts, all around an hour long. That's 3 hours of footage of nonstop conversation, right? Just talking about so many different things between 2 different people. And it's good, right? We write out the segments, so we're always talking about new things, different topics, even covering like memes and today or that's the next podcast. You got to wait till Friday, but we're doing some really cool things and locking in some special guests as well. So yeah, I'm gonna wrap this video up here. If you didn't check out the 3 videos I posted yesterday, you probably should. 3 videos yesterday. I'm gonna start posting more as well. So yeah, lots of content, lots of silver getting thrown out to lots of different people because we also are doing a giveaway on the Silver Stacking podcast for the first 1,000 subscribers, and we already have like 800, so not many slots left. Go book your silver giveaway entry in before all the slots are filled because at 1,000 they're capped and no one else can enter. So yeah, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.